Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we got CPI coming up here in a bit. Oh, let's make sure we get our music on. I'm trying to, for some reason with the VPS, it like rearranges the windows every time that you open it up. So I'm trying to get the windows set back up perfect so that they don't see a big blue line. There, I think that's good. Okay, so here's the deal. We got a CPI coming up here. But chances are that it's going to be a little bit hot because last month's reading was a little bit soft. And a little bit soft primarily because of the government shutdown. So we expect a little bit of catch up. That said, if it is soft, that would be like buy all the things. It's actually like the options and everything are very skewed to the long side. Simply because it would be such a big deal if it was soft. All right. So that's kind of the thing that we're looking at. I thought that, well, we'll try it after the CPI again. I thought that I was going to have the data today, but now I'm thinking about it. I'm like, well, if it got transferred Thursday, Thursday, Friday, Saturday, Sunday, Monday, well, it Thursday might not have been the first day. So Friday, Saturday, Sunday, Monday, Tuesday, and maybe it's only business days. Maybe it's 5 business days. So it might still be a few days. Oh man, it's a few business days. We might have to be like this until the end of the week, basically. Check and see if there was any. Yeah, the big news yesterday was Trump imposes 25% tariff on any country doing business with Iran, effective immediately. And the State Department saying, get out of Iran now, kind of suggesting that the United States may do more strikes. I've been kind of looking at this. The chances of the United States attacking Iran in 2026, regardless of whether it is to help protesters or it helps bring down the Iranian regime or whatever, because of the whole nuclear facility thing, it sounds to me like they are very likely to make another strike. That Iran had enough of a heads up of it coming, that they moved some of the nuclear material away, and it didn't destroy enough of their centrifuges, their refining capacity, that the United States feels that they only delayed the program by a couple of months and that they're going to have to act more forcefully. So all this stuff kind of coming, it makes you think, well, like, but they're not actually going to do any. No, they're going to do something. It's just a question of whether that something will also result in the Ayatollah fleeing Iran. That's a big story coming out last night. JP Morgan kicks off Q4 earnings season with a rare miss driven by weakness in debt underwriting. Oh no. When does Goldman report? Probably tomorrow, huh? DC, New York, brace for deep mid-January freeze. Yeah, the weather pattern is changing. It's going to get cold. Okay, all the things are jumping here. Month over month, core CPI month over month, spot 2 versus spot 3. And then the headline CPI in line with expectations at spot 3. Yeah, that is a buy. Could I have caught some of that? Maybe. Kind of concerned. I think that I don't know if I would have gotten a very good price. So probably be at the top of that. We would need to see it go a little bit further. Still no JS. You know, I tried it this morning, but I thought, well, maybe it doesn't factor it in until later. So we'll pull it up again. Pull it up. I'm just gonna switch screens here so that there's no chance you see my trading account number. Nope, it's still no go. So they said that there's a 5-day holding period, and I think that was all on Wednesday. That was on January 7th. Which was 6 days ago. But I don't know if the 7th counts or not. If the 7th counts, then it's 1, 2, 3, 4, 5, and then we'd be on Monday. If the 7th doesn't count, then it's 1, 2, 3, 4, 5, and we would have gotten it on Monday. But maybe the 7th doesn't count, and it is only work days, and then it would be 1, 2, 3, 4, 5, and then we wouldn't get it until Monday. Or sorry, we wouldn't get it until Wednesday or Thursday or something. So now another thing I can do is come in here and check the account itself. Go to Edge Clear and look at it on their website. Because, you know, there's a chance that I, like, screwed something else up. So it should be interesting to see if there's a significant pullback or not. If this pulls all the way back to where we were, then that kind of suggests to me, well, I guess it depends on how the flows go, right? But sometimes we'll get this thing where, like, the news pops and then we end up lower in the end anyways because all of the order flow ends up being selling. And in fact, actually, that there might be a really good chance that that happens simply because you had a lot of people hedging. What we got was the minority scenario. It was unlikely to happen, but there was a lot of people hedged for it. So you probably are going to see some selling after that event, right? But if I see more than is justified by just take profits, you know, then these other forces over the past week or so that have been pushing the treasuries down, like concerns about Fed independence and so forth, really have legs, and that's concerning. Man, the cough and everything is like not getting better. I'm starting to get concerned that I'm gonna like develop walking pneumonia. Whenever I think about that, I think take big breaths, big breaths. Well, the money is there. I've always been impressed by how long your coughs linger. My wife and I both smoke. It makes sicky coughs linger after you get better, but you run marathons with coughs. But yeah, I do. No, you're totally right. Like, I had the flu from, well, I would say that from the 22nd to the 25th was when I had fever. And then like the 26th, 27th, 28th, I was like coughing up disgusting green stuff. And then by the 29th or so, was when it turned into a cough. And we are now on week 3 of that. And when I cough, when something actually comes up, it's either really sticky clear stuff or it's like white. So when it's white like that, that kind of suggests that there's not really anything there, and it's just, well, I don't know if that's necessarily the case. It means that your immune system is winning though, right? Because it's like when you're really fighting, that's when it gets green and yellow. So at least that's my understanding of it. So now it is, I think there's like just the post-viral cough that like your system continues producing the mucus and continues to be irritated after you're already better. And that kind of cough can linger for over a month. So yeah, and like the cough is there's not really anything there. Cough lingered for like a week and a half. I don't know. I would expect I would expect to have this slight cough for a while, simply because my immune system is so, like, I have a lot of autoimmune problems. So I think that my body is likely to overreact and spend too long. And I can recall times. This cough isn't really too bad, so I don't know. But I can remember one time where it just stuck around, man. It just would not go away. And until they gave me prednisone. They gave me a steroid, and then 3 days of that, and it went away. So yeah, man, I'm still I'm questioning myself here if it was 5 business days. Actually, maybe ChatGPT will know. Lion says, question mark what? What's question mark what? Yeah. It says it is almost always 5 business days, which means that funds will become available Thursday or Friday. That really sucks. Does negative cumulative delta while prices going up indicate absorption? Yeah, we could call it absorption. It means that the selling is not moving the price. Now kind of matters how many orders it is, of course. But you know, in a situation like that, I would probably expect that there was some sort of an iceberg sitting on the bid the whole time. But then the question is, why are they selling? And why are the people on the other side absorbing? Excuse me. Weekends do not count, and the date of receipt often does not count. So with that in mind, day 5 would be Thursday. Dang it. I really thought that we would have it today. That's ChatGPT, though. You know, maybe ChatGPT is just wrong. You get a chance to see... Oh, yeah, you know, I totally forgot about that and never looked at it, actually. But I know what you're talking about. Like, when you sent it to me... Wait, was it the 5th? Well, anyways. When you sent it to me, I was looking on my phone, and I was like, I really don't think that I can. Oh, you know what? For some reason, the link that you sent me is like a login. What happens if I just get rid of this bit? Well, it sounds like that they have some sort of set of indicators. Well, that's interesting. That because isn't this like a prop firm? I don't know, man. When I look on the website, I'm like, oh, okay, that's actually cool. That's useful, but what they're putting on the page is also way overselling it. they're way overselling it. How does exhaustion look like then? Oh man. Yeah, I bet the delta hedging thing is really useful. Like to have it on the chart would probably be really useful, yeah. So man, exhaustion is a difficult thing, Lion, because the problem is there's always more market orders out there than you think there could be. You know, like often in these situations where you're getting like, oh man, like 5,000 contracts hit into this price and it just didn't budge, right? Well, if somebody's willing to sell 5,000 contracts into it, what makes you think that they're not willing to sell 50,000 contracts into it? Right? Kind of depends on why it's happening, like what the setups are and everything. And you know, like, well, we didn't really get what I would consider absorption in this situation. Like honestly, in the treasury, like true absorption where cumulative delta just keeps going and price does not is relatively rare. Okay. You got to keep in mind, a lot of the time people are looking at these sorts of things, they're looking at the S&P 500 futures, and that could just be hedging activity. Like there's all sorts of reasons why they would want to continue buying even though price is going the other way, right? So it still kind of comes back to this thing that like being informed is the biggest edge. If you don't know why it's happening, it's really, really hard to get a high probability trade out off of those kinds of things. Do you have live trading algo? Not at the well. I do have yeah. So what you're looking at right now is a co-located server. We're using that because my local data is having issues right now. And we just figured out that it might be until Thursday or Friday that we're back to full strength. But you know, when I'm doing it on my home computer, I have an algorithm that I run occasionally. It's not anything too serious. What I am doing, like what I've been most successful with is something that I really don't have the skill to transfer over to an algorithm. I think that it would probably require a large language model hooked up to a bunch of proprietary news sources and a bunch of training of the LLM and like reinforcement training on the LLM and all this sort of a thing. So, yeah. Can't really duplicate that part. And there's other parts that are like strictly technical. But the parts that are like strictly technical, the edge isn't big enough. Yeah. Well, we're doing order flow, but like the issue is you have to predict the future orders, right? So there's still this like big wild card is you can sit down and you can say, here are the conditions of the market and here's the flow that I'm seeing. But there's still the, what is the flow that I'm going to see in 5 minutes or over the next 5 minutes or over the next 30 minutes or whatever that is, right? And that wild card, that extra variable, is going to be the biggest determinant of where we actually go in the next 30 minutes, right? So you have a couple of pieces of information. You need those pieces of information. You need all of them. But the most important one is what are the future order flows going to be? And I wouldn't say that it's exclusively news, okay, because there's all sorts of great setups surrounding end of month rebalancing and that sort of a thing. But the predicting the future orders is the biggest part. And I really think your day trading on a day trading time frame, I'm very skeptical of any system having real long-term longevity without it having some measure of predicting future order flows that day, you know? How do the other markets affect each other? Yeah, well, so one of the things that you could see is maybe somebody is doing some big options trade, you know? And then the market maker, like if they're buying a bunch of calls, the market maker has to hedge themselves against that position, because it basically just ended up taking a short position. It's going to buy the stock or the underlying instrument. So, you know, the buying could be over in the option, and then you're going to see buying over here in the treasury. And if you're not watching the option, you're not going to know that that's what's happening. And then why are they doing that? Well, it might just be a hedge. It might be a hedge. And, you know, there could be all sorts of reasons why at that time there's some other correlated instrument that they're like arbitraging against. And so even though they're aggressively buying, the other market makers that are trading that are arbitrage trading between, you know, the cash and the cash and the futures, or between different maturities of the futures, or all these different sorts of things that they do with arbitrage, right? And they're willing to take the other side of them. You know, there's all sorts of things that happen like that. And there's also just a lot of, you know, kind of weird hedges that people end up doing in the S&P 500. It's really, really, especially in the S&P 500, really, really difficult to, you know, when there is a divergence like that, sort out why or what's going on. How would you identify rebalancing flows? You know that it's going to happen. Like you come in and there's some analyst reports and so forth that you can read, and they'll say that based on the performance of all of the assets this quarter, and we're coming to end of month or quarterly rebalancing, here's how much money has to move. They're going to have to buy X billion dollars of equity indexes and sell X billion dollars of treasury futures or something. You know, maybe the other way around. And then I'm going to sit here and I'm going to say, okay, so that's one flow. I'm going to add all my stuff together. But when we get a flow like rebalancing flows, those are really big. So that might result in an imbalance for me, right? So then when I start to see those market orders come in, when I start to see that imbalance in market orders, I know that I'm correct, and I know that it was that flow. That flow was, or rather, I know that flow was the rebalancing flow, right? Now, one thing that I will tell you is that the really big flows, people that are like the large meta orders, they cannot get done what they want to with limit orders. So you can kind of, just as an easy heuristic, just assume that it's all being done in market orders. I think that maybe at best case scenario, they could be half limit orders. You think AI will take over programming? Probably not. Not without a massively different paradigm. The large language model technology is not enough to like replace programmers. More so than that, you know, like the thing that's interesting with the programming is like you still have to know what you're making. Like you still have to know stuff about the technology and what the technology is capable of and have somebody driving it. You have to go with the market direction. Sometimes they will have to get in as quickly as possible to bring their position to market neutral. Typically, this is the case. Markets dump very fast. From a machine learning perspective, do you think that there's more signal to noise in analyzing tick level data or in market depth? That's a good question. I don't know. I'm not sure. I mean, I think that in both of those cases, there is definitely a lot of noise. Like there is a lot of randomness to those things, right? So you really have to have a massive amount of data to really pull stuff out of it, right? But I think that the kind of like, well, so there's machine learning, of course, but really when you get into the kind of models I've seen people like professionally use there, it's usually passing that data into a neural network. And in that situation, they're passing both. The sign of the orders, whether the market was a market, whether the market order was a market buy or a market sell, is one feature that gets passed into the neural network. The imbalance between the inside bid and offer is another feature that gets passed into the network. And then you can do things like, well, from there's all sorts of sophisticated things. So it's something that interesting that's been happening that's more recent is you filter the changes so that you're not getting every tiny little change, but only when there's a significant enough amount of change, and then you tokenize that change. You turn that into like a word that gets passed into a large language model, and then you use the large language model to predict what's going to happen. And I shouldn't say many, but I've seen at least 2 or 3 studies of people showing that those make like really good short-term predictions and stuff. So, you take it all. And then if you have the right kind of model, if you go in and you basically construct all of these features and you pass them into the neural network, and then it comes out and you let it trade and it's successful. If you have the right kind of model, there's something called explainability. So then you can come in and you can look at which features is it actually relying upon here. Do we actually even need this feature or that feature? Where's the edge coming from? For instance, there was this guy, he did a study for like his graduate work, where there was an exchange in China that had like open interest data every 5 minutes. Give you 5-minute open interest, something that we don't get until like the end of the week, and then we only get the previous weeks, right? So he passed all of this stuff into a neural network model, and it came out and it did okay. It was better than break even. It did generate some profits. And then he used explainability, and he found that the profits were primarily coming from the open interest information. Being able to tell if an order in there was opening a new position or closing an existing position. Fascinating, isn't it? Been going through Marcos Lopez del Prado's book on algo trading. He mentioned something similar there. Yeah. You know, to be honest, I really feel kind of behind the curve when it comes to the machine learning stuff. Because a lot of the things that I want to do, I'm kind of limited by the platform. I can't pull those models into the version of NinjaTrader that I have. So, you know, I've kind of been slowly working on something that would allow me to do it in Python. And then maybe I will have more opportunity to really dive into those kinds of models and understand things. You know, I'm really, really interested. The thing that I'm the most interested in learning more about is how to create a reward function. Because it seems to me that just coming in and telling it, make as much money as possible, that if you give it that reward function, that you will often get this overfit model that isn't very robust. So you have to build a more clever reward function that actually really hits upon whatever the market inefficiency is that you're trying to take advantage of, right? Oh, your guy that talked about Sierra a couple of days ago in Discord. Yeah. Well, I wonder with Sierra if you have those kinds of problems. Maybe not. I guess you might still have issues with like the version of C++, but really it needs to be in Python. Like the thing that would make it the easiest for us would be Python, right? It works with C++ 23. Python is too slow and unreliable? Well, I guess it depends on what you're doing, right? I mean, I guess the issue ultimately is that most of the algo trading out there that I'm aware of that actually makes money is hyper short time frames where, yeah, being on C++ versus Python matters. Having a co-located server matters. All the latency, all that stuff matters. And I'm not saying that it's out of reach, but I just don't feel like that's the most fertile ground for a retail trader, you know? I would prefer something where like I get in and it's holding it for 5 to 30 minutes. That's what I do with my own trades. Are there models out there? Are there strategies out there that do that? Maybe. Like, can a machine learning model do that? Maybe. Unclear. But if you could, then it would be okay if it was in Python. It would be okay if it was in Python. You know, with my platform, I want the platform to be written in Rust, but have the ability to run the Python. So if you want to build the strategy in Rust, you can just build it in Rust. And well, I don't know. Is the machine learning like ecosystem in Rust compared to C++? Let's ask ChatGPT. Does the machine learning and neural network ecosystems of C++ and Rust compare as it pertains to algorithmic trading? Oh, let's put that at the beginning. Because I have read many things of people at a firm and they build a model in Python and it works really well, but it's starting to lose its edge and it's getting more slippage and it needs to be faster. So they need to convert it over to C++ or Rust, but almost certainly C++. And they have to do everything themselves. Like everything about that machine learning algorithm and everything they had to write. I don't know if the C++ ecosystem is actually completely up to par on those sorts of things. I would say, though, that like the Rust ecosystem is really interested in that, and it is like growing really fast. So I think build my platform in Rust. And then here's the cool thing is that if you build the platform in Rust, you can still link C++ libraries. So you do it in Rust. Still get the best of both worlds, I think. Yeah, PyTorch is the way to go for deep learning. Yep. Like, not only is PyTorch faster, but it's just got more stuff you can plug into it. There is now Rust in the Linux kernel. Because it basically it compiles down to the same thing. So 07.5 seems to be where they've settled. It came back really far in the treasury. It's kind of curious that the S&P 500 didn't pull back as much. So that does kind of make me think that these factors like the Fed independence and so forth are still factors out there. So I kind of thought, yeah, we'll come back, but we'll still be higher. I thought it would maybe be a little bit higher than that. I was thinking more like 09.5. Another machine learning thing I really think we want to do is like regime detection classification kind of algorithms. Although I'm a little bit afraid of those because I think that you are like introducing a really major curve fitting kind of feature in there with it, right? But in order flow, there definitely seems to be this sort of hidden Markov system where there are periods where it always goes towards the liquidity and periods where it always moves away from the liquidity. Or whatever it is that the thing you're looking at, like if there's absorption versus breakout, there'll be periods where the absorption always wins, and there'll be periods where the breakouts always win. And which regime are you in? And it can switch between regimes like out of nowhere. Try clustering algorithms and classify different days based on some latent feature space. Well, yeah. So if you can pass a bunch of other features into it, and the algorithm is able to find, you know, when you get this combination of features, then you end up in this regime. Then that would be okay. That would be okay. But I've often seen people that come forward with this sort of regime detection sort of a thing. And like based on the way that they've done it, like there's, you know, no way to predict which regime you're in. It just, once the algorithm stops working, it says that you're in the down regime. And and then they're like not using enough data. They're not showing like training and test data sets and all these sorts of things. And so it's like, that's probably just curve fitted. I guess the problem is the algo will detect different clusters, but they will have no, yeah. Like, you detect a different cluster based on the performance of the strategy, but you're not able to correlate it to anything else. If you get that, I would be weary of it. The chances of that pattern just changing are just really high. So yeah, I haven't been able to spend as much time on the algorithmic side as I would like. I think that I'm going to be trying to do a little bit of stuff tonight, though. And I'm a little torn. I've kind of come to the conclusion that what I really want to do for data, because I think I thought that I was going to be able to like hook directly into different data platforms and everything. And now that I understand a little bit more about the way that their businesses work and everything, I think that it's not really practical to happen right now. That I need to have like more of a platform before I do that. So what I'm going to do is I'm going to try and make a bridge, just like what Jigsaw does. Except for that, I think that Jigsaw's bridge, it does operate within the CLR, and I don't think that my bridge will be able to do that. So, but it will still be like shared memory through a DLL and everything. So you get something that you put over in the market analyzer here in NinjaTrader, and then that will pass the data on to my Rust program. So, which was always kind of this thing where it's like, well, you could do that with sockets and Python. I think we'd do it with shared memory, but you could do that with Python, and we never really fully explored that solution. But essentially that's what we're turning it into, except for that instead of it just seeming like a companion sort of a thing where you can pass it over into the Python and then you do that stuff and you pass it back to NinjaTrader. Instead, we're just making our thing that you pass it off to just be a complete full platform. That then you could do all of your data work in that platform from there, essentially. But then the other thing that I've been looking at is I've tried a bunch of different GUI frameworks, and the only GUI framework that I was really able to get to work and do all of the things that I needed it to was eGUI within the Rust ecosystem. So I've tried Iced. Iced is it has a lot of things going for it. It seems like it's a more like standard Rusty kind of approach and everything. But its ecosystem is just so immature and they're still changing so much that one was not practical. There's another one called Slint, which is kind of like making its own declarative syntax for defining the GUI elements. Man, I can't remember the name of it, but it's kind of like the most popular GUI framework over in the C++ side. So, and that one has like a company behind it and everything. I think that's really, really smart. The problem with that one is that it does not integrate with me doing my charts on the renderer directly. So that's kind of kills that one. And then I also tried, what was the other one? There was Iced and Slint. Maybe it was just those ones. But then I was able to get eGUI to work. The problem with eGUI is that it you know, like if you do something like you resize it, it doesn't have all of this stuff to calculate like the sizes of everything correctly and all of that. So you kind of have to set things up in a certain way, and basically what it ends up being is like once you get a really sophisticated GUI, it's just a lot of really complicated code. And that's kind of a thing overall that I'm concerned about and that I see in a lot of GUI options is like that there's a lot of stuff to define in a GUI. And how are you defining all of those things? And if it's all just within like properties that you're using code directly to change, it's not really very manageable. So, but there's this other framework called Deoxys. And Deoxys is kind of trying to be like Flutter for Rust, if you're familiar with Flutter. So what is Flutter? Google made this language called Dart because of issues that they were having with JavaScript. So they made Dart. Dart is kind of like C# or Java, but like everything is kind of done in a JavaScripty way. Okay. So, and that came out and everybody kind of yawned and nothing happened. But Google kept developing it and they developed this framework on top of it called Flutter. And the thing that was cool about Flutter was that once you made it in Flutter, you could generate native binaries for Android, for iOS, for desktop, and for web. So you get all four major platforms all from the same set of code, and they are like native. So it has like its own renderer that it compiles to, and you're using like native rendering code to do it instead of just like, you know, because most frameworks that kind of did this sort of a thing were really just doing HTML in the back and just being a web browser, right? Which is not native, and then you're using tons of memory and resources and all that's nonsense, right? So Flutter gave it to you a native package. And so if you wanted to make a mobile app, like Flutter kind of turned into one of the best ways to do it. If you wanted to be on, all platforms, all four. So Deoxys is basically the same thing, but you get to do it in Rust instead of in Dart. But then the other thing is that Flutter, when you look at like how you make things and all of that, like the code is really messy. It's really messy. Like it's not the most maintainable thing in my opinion. But Deoxys is taking more of a React kind of approach, where you've got like this declarative syntax. They have their own markup language that's similar to HTML, and you have all of the different visual structures here, and then you can come in and say, and here's where this value is, and they are linked so that if you change this here, it changes it here, and if you change it here, it changes it here, all that stuff. So I kind of dismissed Deoxys at first because it looked to me like Deoxys did not have the native part, which is to say that it ultimately is just generating HTML and JavaScript that then runs in a web browser, which I don't like. But in the latest version, they have an alpha of their own renderer, just like Flutter has. So once that comes out, then Deoxys becomes like a full-fledged competitor to Flutter. So we need to go and take that and see if we can get GUI, or the things that we need in a GUI at least, to work in Deoxys. So there's those two kind of competing projects right now. But I think that both of those are like maybe to really get started, like just a few day things. So they're not huge. You just got to find the time to do them. And maybe I could do it tonight. It's interesting when you look at the cumulative delta and the 10-year treasury, the initial jump and then the fall back down kind of made me feel like, yeah, this news is kind of a little bit of a dud. But the orders really came through. In the end, we've had almost 35,000 net change positive in cumulative delta. So there actually were some big boys in there on that. Probably, though, still a lot of profit taking on the offers. So I wanted to build my own platform as well, but that's the exact thing that stopped me is code. That's what's boring to write and is usually doubly boring to maintain. Well, once I get involved in something, I can just keep going, especially with these large language models. I tell you what, I really think that for me, the biggest advantage of the large language model is the feedback loop that it gives you. That you're constantly going back and forth, and I find that very engaging. Engaging in the same way that, like, talking to you guys here and then waiting for somebody in chat to say something and the back and forth there, or like the back and forth that you get in a chat room. Like it's engaging in that way. And I haven't found the LLMs to be particularly great at Rust code, but they're getting a lot better. So I've definitely been able to put together a pretty sophisticated thing that I wouldn't have, like, beyond my initial skill. I think there are some projects where I've done it where, like, we'll vibe code it or whatever, and like if I'm just like doing a proof of concept, like I don't necessarily care how it works, you know. But especially at work and for my own platform, I definitely care what it is. So I totally understand all of the code, and I do it little small part at a time, right? So I think that that's where a lot of people, they're trying to vibe code or whatever, you know, where they will run into problems these days is you say, okay, do this. And then the LLM is going to make all of these decisions for you. It's going to say, I'm going to use this framework and this technology, right? And then eventually you go far enough down the rabbit hole that like the technology can't hack it. It's like a mess, and you just can't accomplish the thing that you actually want to do, right? With me, I already know what technologies I want to use. And in fact, a main large motivating factor behind the thing that I'm building is driven by things that I know that the technology can do, but it hasn't been used for yet. Right. And then I'm doing all of the little, you know, each little change piecemeal so that the LLM is really just helping me to understand the Rust way of doing things and getting the syntax right, because there's some syntax in Rust that can get a little weird. Yeah, it's like a pair programmer that doesn't sleep. There you go. Yeah. And so what I would really like LLMs to be able to do naturally is read through a research paper and convert it into a Jupyter notebook for me to run and get an Intuit. You don't think that they can do that very well right now? I don't know. It'd have to be the right kind of paper. It'd have to be the right kind of paper, but I actually think that they might be pretty okay at that. Except for the issue on that one, I don't know if you would actually want it to be a Jupyter notebook. Because, yeah, if it's a popular paper, they can. Well, I think that one of the issues you're going to have there, like especially with Claude, they've really built it to like handle the feedback. Like if I'm doing something, a lot of the stuff that I'm doing is shell scripts. I tell it to do something. It'll write the shell script, and then after it's written the shell script, Claude wants to run the command that will verify the syntax of it, to verify that at the very least it's syntactically correct, right? So with a Jupyter notebook, I don't think that you have a command line, you know, like view into a Jupyter notebook. So it would probably be better to just tell it to make a Python file based on that study. But if you have a random PDF file, they start to hallucinate. I really think if you were using a thinking model and you told them to think hard and it was the right PDF, I think one of the issues that I see with a lot of research papers is that they are so vague about how they did what they did. Like there are some research papers out there that they give you code. That there is some GitHub out there with some code to show you like the framework that they used and how to use it or something like that. But a lot of papers, they don't have that at all, and so there's just not enough implementation details in the paper to do that. A little bit of selling into the S&P 500 start, huh? Lots of, if you are in the field, you will know what I mean. Yeah. That's why the Trades, Quotes, and Prices book is so good, because that's like the biggest, most significant developments in the market microstructure space over the last like 40 years. If you read any kind of study within that field, it's really hard to understand what they're talking about if you don't have the context from the past studies to know what they're talking about. You recommend other authors? Oh, yeah, there's... Well, so the other guy that would kind of give you order flow stuff is LaSalle. He's another guy in France that he put out a textbook last year. I would like to get it. Something to start working on, but kind of interesting here. The treasury's slowly moving back up as the S&P 500 kind of sells off just before the open here. So, have you guys noticed an uptick in the amount of people that come into the day trading subreddits on Reddit or whatever and tell stories that like day trading completely destroyed their life? Is this just confirmation bias, or am I the only one seeing that? It seems like there's been a major change on social media about how people look at day trading, and the I tried day trading and it didn't work is becoming more common. Just like people are way more skeptical. You come in and say anything about day trading or make any kind of claim about day trading, and I'm not sure I understand why now. Because there's definitely been periods where people have struggled and the market has been hard. But apparently the last month or two has really been the one that pushes people to the brink. Okay. Feel like my beard is like at the perfect perfect length, and anything more than that and it starts to get scraggly. It probably needs to be cleaned up a little bit. Man, so I had a realization off of the conversation we were having yesterday that, like, I just can't, I'm like seeing it everywhere now. One of those things. So, somebody was saying that as it pertains to, like, the motivations of different political groups, that the left is driven more by shame and the right is driven more by retribution. So like on the left, it's like you did something as a kid, and your parents kind of withdrew affection from you because of that. Like you come out as gay to them and then they don't want to talk to you anymore. And what people do is they internalize that as there's something wrong with me. So they develop shame versus you think that you're doing everything right, but it doesn't work out for you because somebody else came along and screwed it up, like retribution. And that's kind of what drives the right. And like I see this in day trading, that it really feels to me like a large portion of the people that get into day trading do it for the wrong reasons. They do it because they have one of these two wounds. Either they've internalized this idea that there's something wrong with them, and they think that somehow day trading is going to be the way for them to redeem themselves, or that they've been wronged in some form and day trading is the way that they're going to get revenge on the world. And I think that if you go into it with that kind of emotional baggage, that you will never be successful at day trading. But now I'm just kind of looking at everything that's happening and going, yeah, those are people that think there's something wrong with themselves. The funny thing is that you can always tell because they project. Like, if you go to a left-wing rally and they're accusing, they're doing whatever it is that they do to, taunt the other side or whatever the deal is, right? The left will always say shame, shame, shame. They'll always chant shame, right? Which doesn't work because the people on the right don't feel shame like that. Well, it's not that they don't feel shame. It's that they don't have some hidden shame about themselves, right? That's the left projecting. The left feels shame about themselves. If you go to the left and you say to the left shame, it really affects them, right? And meanwhile, on the right, like the kind of arguments that they make that like, well, we had this great thing and then it was taken from us by globalism, doesn't really motivate the left. Treasury coming back down there. It was a pretty good move off of the news, but that kind of looks like pretty tough trading in the 10-year because, the order flow has been mostly long. So I would like to be going mostly long because I want to be in line with the order flow. But I mean, has it actually been as much to the long side? Well, no, because through this whole period, it was down, even though the flow was buying. And then here we're getting kind of some weird swings on relatively minor amounts of flow. So it's been, I think, a little difficult. Here's an interesting story from the New York Post. The ICE agent who fatally shot Renee Nicole Good in Minneapolis is unlikely to face criminal charges, as the Justice Department is not expected to open a civil rights probe into the deadly ordeal, according to a report. Federal investigators signed to the probe last week's fatal encounter are looking increasingly less likely to charge the agent, Jonathan Ross, as he opened fire on the 37-year-old, the New York Times reported, citing sources familiar with the investigation. The decision could change, however, as the investigation unfolds, sources said. Investigators who have taken over the case from local authorities said their review of the fatal shooting includes analyzing Russell's conduct and key physical evidence, including the handgun involved. Meanwhile, the Department of Justice's Civil Rights Division has so far declined to look at whether Ross, a President Trump-supporting war veteran, potentially violated the protesters' rights when he fired 3 shots at her. Trump administration, including Homeland Security Kristi Noem, quickly branded Good a domestic terrorist, arguing that ICE agent only fired the fatal shots in self-defense after the alleged agitator struck him in the vehicle. As part of the investigation, the feds are said to be zeroing in on Good's links to anti-ICE activist groups protesting the Trump administration's crackdown on illegal immigration. The Justice Department plans to examine the actions of numerous activists who took part in the apparent neighborhood watch activities in the lead up to Good's death. It comes as massive protests continue in Minneapolis and throughout the country. Okay, but doesn't that mean that the state can still charge her? 'Cause I don't think that that's the final say on it. I think that I need to try a vertical mouse, because I was having, like, my hand was hurting, and then I was kind of putting my arm further up on the desk, and then yesterday from putting my arm further up on the desk, now I just kind of feel it right here. So I think that I'm getting carpal tunnel from the mouse. And anyways, I think that if the federal investigators choose to not charge the officer, that the state of Minnesota can still do something. We've probably seeing a move in oil here. I just heard over the news squawk Donald Trump posted on Truth Social, and at the very end of the post he says help is coming. So Trump is outright saying on Twitter now that they have plans to do something in regards to Iran. I'm shocked. Hmm. Oh, okay. So there definitely is a move in oil. Oh man, the right is really latching onto this New York Post story that the ICE agent is unlikely to face charges. It's at the top of all of them. Mm-hmm. Well, I know I've been quiet here, but I don't really have much else to say about this market today. It is a major shift. We'll see if maybe the treasuries can recover more, because I mean they're still pretty low in the range, right? It's gonna take several days to dig out of that. I want to ask, in your professional experience, do banks do randomization when they submit large orders over time? So, I guess it depends on what you mean by randomization, but I would say that yes. So if you're executing a large meta order, first of all of the orders are split. Like, they will all come in as like one lots. So that you can't reconstruct them. And they will be submitted at random times. They'll randomize the sizes a little bit. They'll randomize the arrival rate of them a little bit. There's just everything about it. There's an advantage in adding some randomness in there so that other participants have a harder time sorting out what's going on. Does the execution algo have the freedom to choose order types? Probably. And what about the orders using mix and match limits and market orders? Probably. The only thing that I really know for sure about that is that when you're trying to buy up a large block of things, you can't really do it with limit orders. So you're lucky if you're able to get half of it filled by limit orders. But in reality, you often are only able to get like 10% of it filled with limit orders, and you have to use the market orders. But from what I saw, it was kind of more like you would have your big icebergs. You know, like if you're going to buy something up, right? You'd have your big icebergs kind of sitting under the market and following it down or whatever the deal is. And, you know, you try and fill as much of it as you can with limit orders. And until you get to the point where the rate of it being filled isn't very good anymore. And that's when they would start, their operations. That's, so they let everybody kind of absorb as much as they can, and then they will have the little push, which is like they'll buy a bunch of it, until the market liquidity starts to get scared, and then they'll just let it dance in that narrow area forever. Try and fill as much as they can in there, and then there's going to be a push again. And they do it in waves. It sounds like it would definitely show on the tape as in, yes, it does. 100% does. That's, I mean, the whole like Elliott wave theory, like bull flags and all that sort of a thing. That's what the result is. That's why you get that kind of pattern. Unfortunately, there's no way to use it to be like, when you get a bull flag, you get a thing in this situation, you're going to get a bull flag, or a bull flag means that we're about to continue on, or, you know, any of that sort of a thing. Or in Elliott wave theory, where it's like there's got to be a certain number of them and you can predict it based on the number of them. Because it depends on how big the meta order is, right? If you don't know how big the meta order is, it doesn't really help you. But can you see it statistically on the tape? Yes. Yes, you can. The biggest way that you see it visually on the tape, though, is in the strong autocorrelation of order flow signs. If there is an imbalance in favor of a market buy right now, then there's likely to be an imbalance in favor of market buy an hour from now. And they're very persistent because it tends to go all day, because there are large meta orders being executed, or at least that's what the evidence suggests. Well, anyways, this is the top of the hour, so I guess it's time for me to get going. I apologize that we're still kind of stuck in the water. I was really excited like today was going to be a big day for us, but yeah, it's probably better that way, because I don't know if we actually would have done well with it. Although maybe there's something in the other data that I have on my screen that might have, you know, caught my attention. I don't know. Yeah, thanks, chat. Yeah, thank you for stopping by. We're here every day, so keep coming around. I guess probably need some motivation to do more of the algo stuff. But there's other creators out there that are kind of doing and teaching that stuff. I don't know if I could necessarily one-up them, except for within the programming. I'm a great programmer. All right. I will see you guys tomorrow. Stay excellent, team.